Hey everybody, I am Stacy Esser and I am excited you're here. We are going to do a deep dive into the Bergen County real estate market. We're looking back to see what is going on and answer the burning question, which is the real estate market cooling down? Is it cooling off? Are we starting to see any shift? So we're going to get into the data, and the way that we look at it is we look at it two ways. We look at what I call leading indicators and lagging indicators. And the lagging indicators basically tell us what's already happened. And the leading indicators are going to give us a little bit of an indication, kind of like you're shaking a crystal ball, of what is going to happen. We are starting to see some rumblings of concern, maybe in that higher end market, and that might be because the 7% mortgage rates have been pretty sticky over the last few weeks. And if you watch any of my other videos, I always talk about this, that, there's a dance between purchase applications and mortgage rates. So when mortgage rates stay up and stick, then purchase applications tend to come down. So we're facing this constant kind of affordability issue and lack of inventory issue more than maybe, let's say, a demand issue. But let's start. Let's get into the data. So what you're looking at on my screen is weeks of supply in Bergen County. So the reason that we look at weeks of supply is because weeks of supply takes into consideration how long it would take the current level of inventory to sell if no other homes came to the market. And it's all based on the sales trend that we've seen. And you do see something interesting happening here. This yellow line is representing 2024. This blue line is representing 2023. And you could see when we started in January that we were trending lower than we were as far as months of supply. Then we were up until right about here, right? So now you could see that on May 7th, you see all of a sudden the weeks of supply hit a little bit over where we were for 2023. And now you could see year over year, we're slightly above where we were. We typically look at it in months of supply. And months of supply, 18 weeks is going to be basically 4.2 and change months of supply. So to have 4.2 months of supply in May, which would be arguably like the height of the inventory levels for our market, is incredibly low. So even if we're hitting or slightly above where we were in 2023, it's still very, very low. Very, very low. So we're going to keep an eye on it. And you can see what happened in 2023. We actually peaked inventory weeks of supply here in at the end of April. And you think about the spring season, that kind of makes sense. And you could see it just kind of went down from there. So what does this mean? If you're a buyer, we're going to take a look at what that means, because maybe this just means there's just not a lot of homes coming to the market, right? This is where this whole thing kind of fell off, right? But we definitely are seeing the market ease up a little bit when we hit the same number or slightly above for months of supply this year over last year. So that's the first one. Now let's go look at actual homes sold. Let's look at homes sold, and let me pick that up here. So home sold is a very interesting backwards looking data, because home sold is basically tracking what sold 3 months ago, maybe 6 months ago, because remember, a house comes on the market and then it goes into pending and then it has to sell. So that cycle, that real estate cycle, could really be anywhere between 3 to 6 months. So when you're looking at a sold number, you're looking 3 to 6 months behind you rather than ahead of you. So let's take a look at what that is. So here you can see in 2024, which is where we are now, we have less homes by a lot. So we've been trending less homes sold, right? And what is that a result of? Well, it's a result of a couple things. It's a result of, do we have the product? Is there a demand issue? Is there an affordability issue? And, Bergen County is a unique area. We don't have a lot of dirt to build new product on. So we've got to rely heavily on resales. And the golden handcuffs are a very real thing. Basically, it's sellers who just can't afford to sell and give up their very, very low interest rate, or they don't want to sell because they're locked in at such a low rate that it would make there's no motivation for them to sell. So that's homes sold. Okay, now let's take a look at what they actually sold for. All right, so now we're taking a look at the median sales price in Bergen, and here's where you see the big difference still in year over year. Home sold, the median home sold price is still 13%, at the end of May than it was a year ago. And then this is looking back 12 weeks year over year. So we've been trending up. And the big question is, will we give any of it back? I mean, that is really the big question. So you're not going to know any of that looking at lagging indicators, but we might start to know that when we look at leading indicators. And that's what we're going to do next. But right now you can see as a buyer or a seller, as a buyer, you've been dealing with still facing increases in the median price point. And as a seller, you've still been seeing increases in your equity. So that's good for you guys, right? Good for you guys. Okay. So there's nothing really unique here. The other cool thing about looking at this is you could see where housing prices peak, right? You could see that typically housing prices, like at least sold prices, these are sold. So when this house sold, and that's sold in June, that was the peak price. But remember, that didn't transact. It probably sold 3 months before, if not 4 months before, right? So even though that's the sales price here is higher, that's a sold house. And that sold house means that the selling cycle for that house was actually when the price of that house was determined, not when it closed. So, when you see this, just remember that actually happened all the way over here. So if you're a buyer, what's the best time to get a deal on a house? Well, it's not buying in March, probably, or February, or even May, June, July, or even July. You're probably better off buying when you're earlier in the year, when you can see that these home prices are typically lower when they're closing in November and December. That's typically when the houses are closing in November, December. So just subtract 3 months from there, and you identify maybe what an opportune time would be to buy, right? Okay, so we're going to move on, and we're going to go look at forward data, forward leading indicators. So what I'm first going to do is look at new listings. So there is a lot of talk about more inventory coming to market when you're listening to the national headlines, but I need you guys to understand that it could just be like 2 states driving that conversation. So do the deep dive into your local market to really understand what's going on. And I'm giving you all of Bergen County, but I encourage you, please reach out to me, text us, and we will give you the information of where to get a hold of us on the screen. But it's important that you do a deep dive in your local market and even into your price point, because local zip codes happen differently and price points happen differently. But for now, understand that Bergen County is not Florida and it's not Texas. So we are still seeing a struggle with inventory. So let's look at that. We're looking at the yellow line is 2024, and we could see we're still looking at less inventory than we had last year. And we had no inventory last year. So again, I'm just warning you guys that even though I'm comparing this to 2023 was an abominable year because we didn't have any inventory. We had no inventory. That is a national stat. That's not just Bergen County. That's a national thing. So any recovery we make over 2023, the percentages are going to start to look really big, but we're starting from nothing. All right, you can see here, right over here, we start to see some year over year numbers kind of lining up, so right about here, and this is in May, the middle of May, we start to see new listings kind of evening out with where we were last year. So the question is that going to continue, or are we going to see any new products coming to market? And my my feeling is no, I don't think you're going to start to see a lot of new product coming to market. And I think it's because the 65% of all home buyers are actually home sellers. So when rates stay sticky at a high percent, people tend not to put their homes on the market. When rates come down, people put their homes on the market and then they go buy something else. So that's what it is. So as long as rates stay sticky in that 7% range, I'm not predicting you're going to start to see a lot of new product. So what does that mean? Well, you're a buyer. It means, don't wait, buy now. And, if you're a seller, you're still in a pretty good place, but I would be wary of something shifting, because we did look at the months of supply and it did look like we were peaking a little bit higher than we were. All right, so that's new listings. So now let's look at what those homes are going on the market for. Okay, so this is a really cool data point to look at. What is the median price point of the homes that are coming to market? And why is that important? Well, that is a major future indicator of where homes are going to sell. Because if the houses are coming on the market for less money, the likelihood is they are going to sell for less money. And here is where you see a shift. Here is where you see a shift of maybe when the homes do close in the next 3 months, you're going to start to see some of that incremental increase that we got in homes sold already. We're going to start to see maybe giving that back a little bit, because the new listings are coming in. Is still higher than last year, obviously, but you can see they were as high as 8%. And now we have a pretty straight line down here. So that's telling me that houses are coming on the market for less of an increase than they were. And the question is, will this continue? So that's going to be a really interesting data point to watch. So another really great indicator is how many homes came off the market in 2 weeks as a percentage of pending sales. And why is that interesting? Well, if you've been a buyer, you have been experiencing a lot of pain, waiting on lines, multiple bids, giving up your firstborn to get a house. It's been pretty tough. So you can see here, and this blue line again is 2023, there was a very strong percentage of homes that were basically coming off the market within 2 weeks. And you could see how that's changed. So that is definitely an indication that buyers are actually able to take a breath. They have a little bit more time to make a decision. And they're not being, maybe as crazed in the process of buying as they were. So again, less homes are coming off the market quite as fast. I can tell you, just as a listing agent, we still get multiple bids, but not necessarily as many as we were getting before. So it's interesting. It's very interesting to see this. Let's go to one more very cool leading indicator. So let's go to my favorite leading indicator of all time. And that's how many houses are taking a price drop. The more houses that take a price drop, the more likely those houses are going to sell for less money. And it also is an indicator that those houses are sitting on the market a little bit longer, right? That's typically when you see what's happening in your market. You look to see how long has a house been on the market. And if a house is sitting on the market longer than the other houses that have sold, that is an indication that they are probably not right priced. That's also a great indicator for a buyer to come in and maybe offer less than they would if a house was just on the market and it had multiple bids. So that's a great way for a buyer who doesn't want to be caught up with a whole lot of multiple bid situation. So this is where we are in 2024, and we could see this number is rising, okay? It's still lower than 2023, but it is rising. It is rising. And so it is a number to watch. So if we start to see the percentage of active listings with price drops increase, we know that there is a cooling in the market. That is what we know. So just for your own edification, in a normal market like before COVID, 25 to 30% of the homes would actually take a price drop. Like that wasn't that was a normal number. But right now, we're nowhere near normal. So percentage of active listings with the price drop was 1.2%. It's still a really low number, but at least the year over the year number is moving. It's moving. It's moving. So overall, my opinion is that we are starting to see more months of supply. We are seeing slightly more price drops. We are seeing listing prices lower. And that could be an indication that the market is cooling slightly. And I just think we have to follow it and follow these numbers. And again, it is so important for you to do this deep dive in your local market and in your price point and the price point you're looking at, because price points happen very differently. Luxury market happens differently than the trade up or move up buyer, than the opening price point buyer. And that's really important for you to look at. I mean, typically we have way less inventory in that opening price point. So some of this may apply, some of this may not. So please reach out and we will guide you through your market. And all the ways you can reach out to us are on the screen. And I would love it. Give me a thumbs up. Give me a follow, comments. Love to hear from you guys. And I appreciate you spending some time with me. This was a June and before 2024 market recap deep dive. I'm Stacy Esser with the Stacy Esser Group. This was your Bergen County market update. Thanks for watching. That sounds great.